Here's what moved markets today.
The 30-year US Treasury yield reached its highest level in 19 years, with the move coinciding with declines across US equity markets for a third consecutive session. The elevated long-term borrowing costs reflect ongoing market repricing of fiscal and monetary policy expectations. On-chain data indicates wallets holding over 10,000 BTC increased their collective holdings by approximately 43,000 coins over the past 60 days, occurring alongside net selling activity from smaller wallet addresses during the same period. The pattern reflects divergent positioning between large and small holder cohorts. The SEC published Regulation Crypto Assets 4 days after cancelling the vote originally scheduled to approve it. The sequence represents an unusual procedural pathway for the proposed digital asset regulatory framework, with the publication occurring outside the initially planned approval process. Cryptocurrency exchange Bybit disclosed blocking over 30,000 suspicious withdrawal attempts during the first half of the year, preventing approximately $700 million in potential losses, according to the company. The figures follow the exchange's disclosed $1.46 billion security breach, with the prevention data representing subsequent security measure enhancements. Robinhood's chief executive stated that US investors currently lack access to tokenized equity products available to investors in other jurisdictions, highlighting a regulatory gap between domestic and international markets for blockchain-based securities. The comments reflect ongoing industry discussion around the pace of US regulatory clarity for tokenized traditional assets. Bitcoin.com integrated the UAE-regulated USDU stablecoin into its wallet platform, expanding available settlement options beyond dollar-denominated stablecoins. The addition reflects continued diversification of regulated stablecoin infrastructure across different regulatory jurisdictions. Looking at this morning's price action as of 9:20 Central European Time, gains and losses are closely balanced with modest moves on both sides. Polkadot up 3.38%, Polygon adding 3.13%, and Athena gaining 2.73%. Low single-digit strength across Layer 1 interoperability, Layer 2 scaling, and synthetic dollar protocols. On the downside, Hyperliquid leads decliners at 3.22%, with Tezos off 2.65% and Near declining 1.84%. Modest selling concentrated in decentralized derivatives and smart contract platforms, with losses roughly matching the magnitude of today's gains. The Crypto Fear and Greed Index rises to 41, climbing 1 point from yesterday's 40 and extending its position in neutral territory for a second consecutive session. The continuation beyond the initial crossing distinguishes this attempt from the brief mid-August breakthrough, where the index touched 41 before reverting to 37 within a single session. Sentiment has now sustained a position at or above the neutral threshold for 2 sessions, occurring alongside today's balanced but quiet market conditions. The persistence, however modest, suggests this crossing may carry more structural support than the previous attempt, which failed to hold above 40 for even one additional session. While 2 consecutive sessions above the threshold represented meaningful progress relative to the pattern observed throughout the year, the positioning at 41 remains only marginally into neutral territory. The durability of this improvement will continue to be tested in subsequent sessions, with the key distinction from mid-August being whether sentiment can extend this streak further, rather than repeating the single-session reversal already observed once this quarter. That's your daily market update. If you found this useful, give it a like and subscribe for tomorrow's briefing. See you then.